Good morning, everyone. Good morning to all of you. So first, let me know, is audio, video both are okay? Are we good to go? Is audio and video both are okay? Are we good to go? Yes, okay, both are okay, na? Let's start. So first of all, how are you all? Let me know. How are you all? Good morning, everyone. Okay. So it's been a 3 to 4 days we haven't had a class. After Thursday, we haven't had a class, I think. So let's revise first what we have completed already. Okay, then we will be covering the next topic. So first of all, we were discussing about the national income aggregates. So we have discussed the certain terminologies of national income like gross, net and everything. So let's revise these first and then we will be covering the next topic. So first of all, do let me know what does the gross value means. What is the meaning of gross? What is gross? Good morning to all of you. So what is gross means? Okay, gross means the total value. Okay, gross means the total value without deducting anything from that. So the total value of a product will be known as your gross value. Okay, and what about net value? What does net means? What about the net value? Net means remained value. Okay, so net value means the remained value will be known as your net value. That is correct. Okay, so how to calculate the remained value? How we can calculate the net value? Very good. Gross minus depreciation will be your net value. If you deduct the depreciation out of the gross value, we will get the net value. So gross minus depreciation is your net value. Okay, now next. What does domestic product means? What does domestic product means? What is domestic product? Very good. Production within the geographical boundary. When the production is happening within the geographical boundary, that will be known as domestic product. Correct. Whether it is done by Indian or whether it is done by foreigner doesn't matter, but the production should be within the geographical boundary. What is the national product? What is national product? Let me know what is national product. Very good. Production done by the citizen is known as national product. है ना? Production done by the citizen is known as your national product. So whether it is done within the geographical boundary, whether it is done outside the geographical boundary, both will be counted if the production has been done by the citizen. Now, what is the market price? When we are calculating the market price, what we add here? What is your market price? When we calculate the market price, we have to add what? Very good. Indirect taxes. Okay, we have to add here the indirect taxes. So in the market price, we add the indirect taxes of the goods and services. Okay, now what is factor cost? In factor cost, how we can calculate the factor cost? Correct, by adding the subsidy. Now what is subsidy? Subsidy is simply the financial assistance given by the government. So we have to add the subsidy in the factor cost. Very good. This is what we have discussed here. Okay, so factor cost is simply the subsidy given by the government of India. The subsidy given by the government of India will be counted under the factor cost. Very good. So now we have to discuss the NFIA. NFIA, we are going to start here. So first of all, let's understand what is NFIA. So NFIA stands for net factor income, net factor income from abroad. Okay, or we can call it the full form, or you can call it net foreign income. Net foreign income from abroad. From abroad. So you can call it a factor income, or you can call it a foreign income. Both are same. You can call it factor income, or you can call it a foreign income. Both are same. Now, what is this factor income or foreign income is? So you can see, first of all, we are talking about net factor income and net foreign income. So what is factor income or foreign income? So simply we are earning money from foreign country. We are earning money from the foreign country. But that income we are counting as the net value. Net means remained value. Like whatever income we have done in the foreign country, which we have received, that will be counted under the net factor income from abroad. Okay, so NFIA means the income we have done from the outside of our country. So the money we have earned from outside of our country, but the remaining value of that money will be counted here. The remaining value of that money will be counted here. How to calculate this? So we will be going to calculate it like that. NFIA equals to income of Indians in foreign, income of Indians in foreign minus income of foreigners in India. So when we calculate the difference between the income of Indians in foreign minus income of foreigners in India, that will be known as your net factor income from abroad. Okay, that will be known as your net factor income from abroad. Clear? So let's say, for example, Indians earn 10,000 rupees in foreign countries and the foreigner earned rupees 5,000 in India. So the difference between these two will be known as your net factor income from abroad. Okay, will be known as net factor income from abroad. That is the NFIA, net foreign income from abroad. So let me know, is it clear to everyone? So NFIA stands for net foreign income from abroad, or you can call it a net factor income from abroad. Why we calculating the difference? Why we are subtracting the income of foreigners which they have earned in India? Because we want a net value. Net means the remained value of the earning. So we have earned $10,000 there and they have earned $5,000 here. So we have got only $5,000 in India. So this NFIA can be positive, it can be negative, or it can be zero. It will be positive when we have earned more money in comparison to foreigners. It will be negative when we have earned less money in comparison to foreigners. And it will be zero when we and foreigners both earn the same value of income. Okay, so according to that, net factor income from abroad will be defined. I hope it is clear to all of you. Yes or no? Let me know. Is it clear to all of you? Let me know so that I will be continuing the session. Yes, okay, clear to everyone now. Let's continue. Now this is NFIA. Let's understand the NFIA first by reading the definition. So you can see here what we are saying, that net foreign income from abroad is what? It refers to the difference between the factor income received from the rest of the world and the factor income paid to the rest of the world. So what we have earned and what we have paid, the difference of these two will be known as net factor income. So you can write like this: factor income earned from abroad minus factor income paid to abroad. Or you can call it income of Indians in foreign minus income of foreigners in India. Both the things are same. Okay, both the things are same that we are discussing here. Clear? So that is NFI. Apart from that, you can see here we are saying that the net factor income is a significant to differentiate between the domestic income and the national income. Okay, it will help us to differentiate the domestic income and the national income. Like you can see here, national income equals to domestic income plus your NFIA. So NFIA calculates the income of Indians that has been done in the foreign. Okay, that calculates what? The NFIA. So if you add the NFIA with the domestic income, both will be covered as the national income. Both will be known as the national income. Clear? Now next is note is there, and that note is saying that NFIA can be positive, negative or zero. Clear? It can be any of these. So this is the NFIA, net factor income from abroad. How to calculate NFIA we have discussed. So all the terminologies which are related to national income we have discussed, like what is gross, net, domestic product, depreciation, national product, market price, factor cost, NFIA. After understanding all these concepts, we will be easily able to calculate the national income, GDP, GNP, NDP and NNP. All these things will be calculated very easily. Okay? Now, next. Let's move forward and let's talk about the next topic of ours, that is fiscal policy. Achha, do let me know what is fiscal policy. What is fiscal policy? You have to tell me first, then I will be letting you know what is fiscal policy. So let me know what is fiscal policy. Sorry. No, yesterday there was no class. Yesterday there was no class. That is equal to monetary policy. Don't know. Financial policy by government on budget, policy by government of India. Okay. So some are saying don't know and some are saying this is the policy which has been made by the government of India. Okay. So if I talk about policies in India, let's understand first the one important thing, that there are two types of policy. How many types of policies are there? There are two types of policy. One is known as your monetary policy and another one is your fiscal policy. Let's understand both one by one and then we will be covering the fiscal policy in detail. Okay. So let's add here. If I talk about the policy, so in India we have two types of policy. In India we made mainly two types of policy which is helping us to maintain the demand and supply of the population. Okay. To maintain the demand and supply of the population, we have two types of policy. That is first monetary policy and the second one is fiscal policy. Monetary policy and fiscal policy. So these are the two policies with the help of which we are maintaining the demand and supply of the population, the demand and supply of the country. Okay, with the help of these two policies. And these are the two policies which are maintaining the economic growth of the country also, because they are controlling the demand and supply of the population. Okay. Now, if I talk about the monetary policy is prepared by RBI. So RBI makes the monetary policy and the review of monetary policy given by RBI bi-monthly. Bi-monthly means in every 2 months. In every 2 months, RBI will be providing us the review of monetary policy. That is the meaning of bi-monthly policy. Okay. Now, if I talk about the fiscal policy is formulated by Ministry of Finance. So we can say Government of India makes the fiscal policy. And the review of fiscal policy will be provided annual. So it works on the annual review. So monetary policy will become 6 times in a year because it will providing bi-monthly review. Bi-monthly review means every 2 months there will be a review of monetary policy. But the fiscal policy is there and that fiscal policy will having a annual review. In a year only one time fiscal policy will be introduced. Clear? Now next. If I talk about the monetary policy, okay, if I talk about the monetary policy, what is it? Simply, it will be providing the annual review. It will be providing the understanding how to change the money supply in the country. So, monetary policy help us to change the money supply in the country. Like, what is the objective behind making monetary policy? Let me know. Why RBI is making monetary policy according to you? According to you, MOF means Ministry of Finance. MOF means Ministry of Finance. So you let me know first of all. What is the reason behind making the monetary policy? So maximum people are saying to control inflation. No. The actual reason, there are three main objectives. First, to maintain price stability. Okay, to maintain price stability. Second, to maintain economic stability. To maintain economic stability. Okay, and the third one will be your for the sustainable growth. For the sustainable growth. Okay, so these are the three main objectives of your monetary policy. These are the three main objectives: price stability, economic stability, and the sustainable growth. Now, why maximum? Whenever I ask why RBI is making monetary policy, maximum people say the same thing: to control inflation. Why people are saying to control inflation? Because what happens here, the main objective of RBI under the monetary policy is to control the prices. So it means if the prices are high, RBI has to reduce these prices, and if the prices are low, RBI has to increase the prices. This is what RBI has to do. This is the meaning of maintain price stability. Okay, but in our country, maximum number of times this situation happens. In our country, maximum number of times there will be a inflation. Inflation means when the prices of goods and services are keep rising. So maximum number of times in our country there will be rise in the prices. That's why we always think that RBI is reducing the prices. It means RBI is controlling the inflation. But this is not the main objective. The main objective is to control the prices, is to maintain the price stability in the economy. If the prices are high, RBI will reduce that. If the prices are low, RBI will increase that. But maximum number of times RBI has to perform the first condition. That's why we think that RBI control the inflation with the monetary policy. But this is not the right answer. Right answer is that the price stability maintained by RBI. So these are the three main basic objectives of the monetary policy. Do remember that. Okay. Now, what is your fiscal policy? Why we are making fiscal policy? So fiscal policy talks about the revenue and expenditure of Government of India. Revenue and expenditure of Government of India. That will be estimated revenue and expenditure, like how much amount of money will be earned by government in a year and how much amount of money will be spent by Government of India in a year, that we calculate under the fiscal policy. So fiscal policy try to control the demand and supply of the consumers in the market. Okay, it tries to control demand and supply of in the market of the country. That will be doing here as a revenue and expenses. Okay, next. So Government of India making the fiscal policy for the revenue and expenditure of Government of India, and that is known as simply your budget. So fiscal policy will be presented by Government of India, Ministry of Finance every year with the help of budget. So every year on 1st of February, government is presenting the budget, and that budget is giving us the fiscal policy. So fiscal policy presented by Government of India every year with the help of budget. Okay, so this is the fiscal policy. So we have discussed that fiscal policy is simply the policy of Government of India's income and expenditure. So under the fiscal policy, two tools will be used. First is your tax and the second of your government spending. So these two tools will be used, government spending plus the taxes, to do what? To maintain the revenue and expenditure of Government of India. Okay, and this will be estimated. This will be estimated. So we will be having an estimation of income and expenditure for the upcoming year, and that is known as fiscal policy. Okay, and that is known as what? That is known as fiscal policy. Now, next. So you can see here that the tool used by government in which it uses its tax revenue and expenditure policy to affect the economy is known as fiscal policy. So the type of policy in which government of India is using its tax revenue and expenditure policy that affect the economy is known as your fiscal policy. Clear? Second, administered by Ministry of Finance. It is administered by whom? It is administered by Ministry of Finance. So Ministry of Finance is going to administer this. Okay, it means this policy will be made by the Ministry of Finance. Okay, and it will be presented by the Finance Minister of country, that is Mrs. Nirmala Sitharaman. Clear? Right now, the fiscal policy changes every year. So every year the fiscal policy of government of India is keep changing. So it is related to the government's revenue and expenditure. The fiscal policy talks about the government of India's income and expenditure. Now it focuses on the economic growth of a country. That's why we are trying to change the demand of the consumer with the help of tax spendings and expenditure policy of government of India. Okay. Now the tools of the fiscal policy, first we have a tax rates and the second we have government spending. So these two are the tools of government of India by which government of India is trying to control the demand and supply of the population. Clear? Let me know, is it clear to everyone? All the points till now related to the fiscal policy is clear to everyone? Let me know. Okay, clear to all. Correct. Let's move forward. So now if I talk about the budget, what is budget? First of all, the government of India has defined the budget in the Article 112 of Constitution. Okay, actually this budget word has been created by the Britishers. So Britishers has taken a French word, that is budget, and the budget means the leather bag. From that French word they have made the budget word and they have introduced budget in India in 1860. So who took the budget in India? The Britishers has introduced the budget in India and they have introduced the word budget in our country. But if I talk about this particular budget, the government of India has defined this budget as the name of annual financial statement in Article 112 of your Constitution. It means the budget word is not defined anywhere in the Constitution. Why we are calling it annual financial statement? Because it will be presented annual in a year once and it is a statement that is related to money, the income and expenditure of government of India. That's why we are calling it an annual financial statement. Okay, that's the reason. So now let's understand what this annual financial statement is doing. So this annual financial statement is a statement of income and expenditure of government of India. Okay, now let me know what are the sources of income for government of India. From which source government of India is earning money? Do let me know from which source government of India is earning money. So what is the source of income of government of India? Let me know. Okay, first answer is coming tax. So maximum people are saying tax. Okay, so the first source of income for government of India is tax and there are two types of tax. First we have direct tax and second we have indirect tax. So there are two types of taxes, direct tax and indirect tax. Acha, why we call the direct tax and indirect tax to them? So why we call the tax direct tax as a direct tax and why we call the indirect tax as an indirect tax? Okay, direct tax taken directly from salary. Direct tax is GST. No, direct tax is not GST. Tax levied by government is direct. Both the taxes are charged by government of India. Income tax individual, okay. Indirect is taken from our use product, okay. What about rest? TDS and GST, indirect tax, GST, indirect tax can be shifted on. Very good. Vasanthi ma'am, very good. Okay. The difference between the direct taxes and indirect taxes is that when I talk about direct tax are those taxes whose burden cannot be shifted. Whose burden cannot be shifted on third party. So direct taxes are those taxes whose burden cannot be shifted on the third party. Okay. What is indirect tax? What is indirect tax? So indirect tax is a tax whose burden can be shifted on third party. Okay. Indirect taxes are taxes whose burden can be shifted on third party. Clear? So you can't shift the burden of direct taxes to any person, but you can shift the indirect tax of to the any person. So how to understand that? Let's take an example. For example, I am earning a money. Okay, I'm earning a certain amount of money. So I have to pay income tax on my salary. Okay, I have to pay income tax on my salary. So I am earning a money from Adda 24/7. Okay, so what's happening here? Adda 24/7 is providing me a salary. So whatever salary I am earning, according to that, there will be a percentage of income tax which I have to pay, because Government of India already has given us the slab of income tax, like what amount of earning you are doing and how much amount of tax you have to pay. So let's say I have to pay 10% tax. So this 10% in the form of tax deducted at source in the form of TDS will be deducted from my salary and will be paid to the Government of India. This is the income tax collection way. Like with the company, whoever giving you the salary, you have to take tax out of the salary and the company has to pay to the Government of India. Okay, that's the income tax. So can I say to the Adda 24/7, then do give me my full salary, because my 10% TDS will be paid by my brother or my father or my friend, anyone else. Can I do that? So I will be taking my whole salary and my TDS of 10%, the income tax part, will be paid by my friend or my family person or someone else. Is it possible to do? No, because this is a direct tax. If I am earning a certain amount of money, then only I have to pay the liability of that tax. No other party can pay that tax on behalf of me. So that is known as your income tax. That is known as your income tax. I hope it is clear. So income tax is simply a tax that you are paying in the form of direct. It means you can't shift the burden of direct tax to the another party, right? Now the second example will be your GST. Now GST is indirect tax. So there is a company that is Adda 24/7. Okay, this company is providing educational services. This company is providing educational services. So this is the company which has to pay the indirect tax. This is the company which you should pay the GST here. But what happened? This company has shifted this burden on the students. So now you guys are paying GST to the Adda 24/7, and Adda 24/7 is taking GST from you and paying to the Government of India. Okay, company is taking GST from you and paying to the Government of India, because the GST is an indirect tax. Because the GST is indirect tax, and because the GST is indirect tax, that's why we are saying here that Adda 24/7 is able to share or is able to provide the liability of the tax on the another party, or shift the burden of the tax to the another party, because this is an indirect tax. Okay, what type of tax is it? It's an indirect tax. Clear? So what are the indirect taxes? Indirect taxes are the taxes which can be shifted on the third party, like the company did. Okay, next. Let's understand one more example to clearly define this. So there are two types of taxes. First is we have corporate tax, and second we have a GST. I hope you heard about both the taxes, corporate tax and GST. Acha, corporate tax is paid by whom? Who pays the corporate tax? Let me know. Okay, industries, companies. Companies. Okay, so corporate tax will be paid by companies. Now GST will be paid by whom? GST will be paid by whom? Individuals. Okay, fine. So let's take an example of Adda 24/7. So this is the company. So let me know, out of corporate tax and GST, what tax will be paid by the company? So Adda 24/7 have to pay the corporate tax or the GST. What tax the company have to pay? Okay, corporate tax, GST both, GST corporate, GST both. So some are saying both taxes will be paid by Adda 24/7, some are saying GST will be paid by a company, or some are saying corporate tax will be paid by the company. So three different answers we are getting. Let's understand this within example. Let's say company is Adda 24/7. So this company is earning a certain amount of money, and this company is paying taxes to the government of India. If we say that the company have to pay only corporate tax to the government, then why company is collecting GST from you? If company is collecting GST from you, so company has to give the GST to the government, because company can't have by own the taxes. So taxes should have to go with the government. So if company is taking GST from all of you, so company have to pay that GST to the government. But company is also paying the corporate tax. How and why? Let's say, for example, the product you are purchasing, the batch you are purchasing is of 5,000 rupees. Okay, the fee of particular batch is, let's say, 5,000 rupee. So this is the price. This is the price of the product. Now this price includes your cost, your profit, and your tax. Okay, these three will be covered under the price of a product. This is the price. Let me write here. This is the price of a product. So if I talk about the tax here, the tax will be your indirect tax, because this product is AND product. Now, this 5,000 batch is your AND product, and on the AND product always the GST will be filed. So the tax you have to pay here will be your GST. Okay, this is the GST. So this GST will be collected from the students, and that should be paid to the government of India. Okay. So this what government, this what Adda 24/7 is doing. Now if I talk about corporate tax. So every year company is earning a certain amount of profit. Out of that profit, company has to pay the tax, and that will be known as corporate tax. That will be known as corporate tax. Clear? Now why we are paying corporate tax and the GST both? Reason, because out of 5,000, the cost to per student, let's say 2,000 rupees. So what amount company is spending on a per student? That is 2,000 rupees. Let's understand. Let's assume that. And the profit company has added is 2,000 rupees, and the tax government is paying is 1,000 rupees. Okay. So this profit which company is earning from per student 2,000 rupees, this profit will be creating a certain annual income for the company every year. Every year, if a company is earning 2,000 rupees per student, this will be creating annual income of the company. So on the annual income, company have to pay the corporate taxes, and the services company is provided. For that purpose, company has to take the indirect tax also. So company will be paying corporate tax as well as the GST. Clear? Let me know, is it clear? That company has to pay both. Yes or no? Answer quickly. Corporate tax is direct because company is paying that tax from its income. Company is not taking any kind of income from any kind of tax from other parties. Because corporate tax will be charged on the income of the company. That's why it's a direct tax. Okay, Pramod sir? Okay, clear to all. Okay, let's move forward. So one of the income sources tax, that is from the company is earning, the government is earning. What are the other sources? What are the other sources of income? Apart from tax, what income government is getting? That's not the income generated by government, the students. Prasanti ma'am, you are paying the tax. Tax belongs to the government of India, not the company. So how you can say that the tax you are paying, that's the income of a company? That's not the income of a company. That's the income of government of India. Because Adda 24/7 is an educational company, so government of India has allowed the company to provide the educational services. On that, government of India charging the tax, and that tax will be paid by the students because it's an indirect tax. So you are paying the tax to the government of India. The mediator of correcting that is company. Okay, so that's the income of government, not the company. Anand sir, I have just explained the difference. GST is an indirect tax and your corporate tax is the direct tax. So corporate tax will be charged on the income. GST will be charged on the product and services. That's a goods and service tax, you can see. So whatever goods and services you are getting from the market, on that you are paying tax, that's a GST indirect tax. And corporate tax is a direct tax which will be charged on the income of the company. This is the difference. I hope it is clear now. Dividend from company. Okay. So the other way of earning is non-tax income. Other way of earning is non-tax income. Acha, do let me know, you guys have a bike or car or everything, na? Like you ride or you drive also. So what happens if you have not wear the helmet and you are riding the bike? If traffic police saw you and stopped you on the road, so what happens? Very good. You have to pay fine. That is the non-tax income. Okay, that is the non-tax income. So non-tax income is simply the income apart from taxes, like your fine, penalty, challan, grants, everything will be counted under the non-tax income. So non-tax income is very simple. The income which is not a part of tax revenue, it's a part of fine, penalty, challan, etc. Okay. Apart from that, the source of income of government of India is debt receipts. Debt means loan. Receipts means income. So the income government of India is doing on loan will be known as debt receipts. So if you have heard the news, you have find out that the government of India has given loan to Maldives. Okay, government of India has given loan to Maldives government. So on the loan which Indian government has given to Maldives, the government of India is going to charge a certain rate of interest. Okay, what government of India is going to do? Government of India will charge a certain rate of interest and that will be known as debt receipts. So when you are giving loan, on the loan you are charging a certain rate of interest, that will be known as your debt receipts. Okay. Now the other part is non-debt receipts. Non-debt receipts. Non-debt receipts simply means the source of income which is not from the debt, which is not from the loan. It means income on investment. So when you are calculating the income on investment, that will be known as non-debt receipts. Okay. Income on investment will be known as non-debt receipts. Is it clear? Income on investment will be known as non-debt receipts. Non-tax mean fine, penalty, challan. Fine, penalty, challan will be known as non-tax income. Non-debt receipts example will be your, like government of India has invested in the share market and the profit which is happening in the share market will be known as non-debt receipts. Clear, Ravi sir and Ashok sir? The example of both is clear? Okay, next. Now the expenditure. Expenditure, where government is spending money? The expenditure of government of India will be done where? On the scheme, like we have a scheme expenditure. What is a scheme expenditure? Simply government of India is spending money on the development of the country. Government is providing LPG connection, government is developing roads, government is developing schools, dams, your hospitals and all. Government of India is working on the, let's say for example, education of the students, providing housing facilities to the people, providing your better road connectivity to the people. All these will be done by the government of India, and all these activity required expenses, and that expenses will be performed with the help of scheme expenditure. So we know that how many families are there to whom we have to provide the LPG connection. We already know that how many families are there to whom we have to provide the housing, how many roads we have to develop, how many schools, dams, hospitals we have to develop. So these are the planned expenditure. Like I already know there are 50,000 people who need housing. So according to that, I will be allocating the money in the Awas Yojana. And I also know that how many families are there who are eligible to take the LPG connections. So I know that in the Ujjwala Yojana, how much amount of money I have to spend. So that is known as a scheme expenditure. That used to be known as planned expenditure. It used to be known as the planned expenditure. What is planned expenditure? Simply the expenses, what I can say, the planned expenditure is simply the type of expenses that we already know that we have to spend. That is the planned expenditure. What is the other part? That is the non-scheme expenditure. So non-scheme expenditure used to be known as non-planned expenditure. Now what does non-planned expenditure means? Non-planned expenditure simply means which we do not have idea before, like the natural disasters. Okay, like apart from natural disasters, we have what? We have the other issues like the flood and etc. that will be there. So the government didn't know that in the next upcoming year how many times the flood or natural calamities we have to face. So we cannot be estimating the amount for that, and this is why that is known as non-planned expenditure, or you can call it a scheme expenditure also. Okay, you can call it a scheme expenditure also. I hope it is clear. So planned expenditure is now known as the scheme expenditure, and non-planned expenditure now used as a non-scheme expenditure. These name has been changed by Dr. Arun Jaitley ji, Mr. Arun Jaitley ji. Okay, chalo, let's move forward. So if I talk about the budget, there are certain things. So every year when the budget will be made, that will be estimated budget. Every year the budget will be made, that will be estimated budget. So let's understand the types of budget. There are two types of budget. First we have balanced budget. And second we have unbalanced budget. Second we have unbalanced budget. So there are two types of budget, balanced and unbalanced budget. Okay, now what is balanced budget? So balanced budget simply means when the income is equals to expenditure. So budget is the statement of income expenditure, right? And when the income is equals to the expenditure of government of India, that will be known as your balanced budget. That will be known as your balanced budget. Now what is unbalanced budget? Unbalanced budget is simply that can be two types. The first type can be when the income is more than expenditure. Income is more than expenditure. And the second time will be expenditure is more than income. Expenditure is more than income. Okay. Now, when the income is more than expenditure, that budget will be known as surplus budget. This budget will be known as surplus budget. And when the expenditure is more than income, that will be known as deficit budget. That will be known as your deficit budget. Okay. So, surplus budget means income is greater than expenditure. Deficit budget means expenditure is greater than income. Clear? So, every time, every year when Government of India is making budget, every year government made an estimated budget. Okay, every year government makes estimated budget. So, on 1st of February, whenever the government is presenting budget, here the budget will be presented. The budget will be presented on 1st February. And every time this budget will be estimated budget. It will be estimated budget. It means Government of India on the 1st February represents the estimated budget, that this might be the income, this might be the expenditure. So, we are estimating the budget. That's not a real budget that this is going to happen. That is confirmed. No, we are estimating that this is the source of income and this amount of money we will be earning from these source, and that's the expenditure of ours. So, we have discussed that the Government of India every year present the estimated budget. Every year Government of India is presenting estimated budget. Now, if I talk about the next thing, in the end of the year, this estimated budget will be revised. In the end of the year, this estimated budget will be revised to know whatever estimation we have done is right or wrong. Okay, how much we have expected. Okay, that we are discussing here. So, when we have made the estimated budget, we have made the balanced budget. We have made the balanced budget. Like we have estimated the amount of earning will be equals to the amount of expenditure of ours. That was the estimation of Government of India. But in the revised budget, what we found every year we found the deficit budget. It means every year the expenditure of government will be more than the income of Government of India. So, the revised budget will always be a deficit budget. So, do remember, budget will be presented on 1st of February every year by Ministry of Finance. And that will be an estimated budget. That will be what? That will be an estimated budget of Government of India. Clear? Let me know, is it clear to all? Yes, estimated budget for upcoming year. Before February, in the month of December, we done the revised budget. We performed the revised budget. We started estimating, we started calculating whatever amount of income we have done and what expenditure we have done. Let me know, is it clear to everyone? So, because India is a developing country, that's why every year our budget will be deficit budget. Okay, clear to all now? Now, so these are the things which we have discussed today, okay, about the budget and fiscal policy and all. So now in the next class, we will be covering the another thing. Achha, one information for all of you is this, that from tomorrow onwards, we will be starting the classes on the basis of syllabus. Like tomorrow will be first class, that will be based on the in-depth class. It means the foundation classes has been over today. This is the 5th foundation class. So the people who are watching us on YouTube, this will be the last demo class on the YouTube. From tomorrow, there will be no demo class. That will be classes we are starting as per the syllabus that has been given by the IFBF. So this is these were the foundation classes in which we are trying to understand the concept of different topics of the Indian economy, Indian financial system. From tomorrow onwards, we will be starting the subject with the individual topics. Okay. Now, before that, before we end, I have one information for all of you, that these 2 batches has been started from 13th of January. In these 2 batches, we have started Indian economy and Indian financial system in the morning 7 a.m. I am talking about the English medium batch, right? And the principles and practices of banking in the 9 p.m. Okay. And to enroll, you have to use a code, that is Y496, and right now 81% discount is going on these target batches if you use a code Y496. Apart from that, On the JAIIB CAIIB Mahapack, we have these JAIIB CAIIB Mahapack with the double validity plus 81% discount. So what is the difference between the target batches and the Mahapacks? So in the target batches, you will be getting the conceptual classes, your ebooks or test series. But in the conceptual classes, in the Mahapack, you will be getting conceptual classes, test series, ebooks. You will be getting there the upcoming revision batches at the time of exam, the MCQ batches, numerical batches, case study batches. Everything will be available in the Mahapack. That will not be available in the target batches. Now, how to enroll? To enroll, you have to go and visit the Ready for 7 application. If you have not downloaded yet, then do download the application. On the application, you will find the details and 1% additional discount will be available. So, to enroll, just click on the JAIIB CAIIB if you want to go with the target batch only. Okay, if you want to go with the target batch, just click on the JAIIB 23. If you want to go with the Mahapack, click on the Mahapack. So here you can click on view all. When you click on the view all, you will find all the target batches which are going on the application. So these are the target batches. You can say individual subject target batch is available. Apart from that, combination subject batch is available and the whole batch is available. To enroll, just click on the batch. This is the English medium batch. Do read all the details. And after reading all the details, you have to click on the buy now. When you click on the buy now, you have to enter a code. That is Y496 and click on the apply. When you apply, you will find 80% discount is going on. For 1% additional discount, you have to go to the application and you have to use the coin. You will get 1% additional discount. The validity will be 6 months. All the subjects of the JAIIB will be covered. Okay. Now, next, the more best option for all of you will be your JAIIB Mahapacks, CAIIB Mahapacks. Reason behind it, they are having double validity. In the JAIIB Mahapack, you will be getting 1 year validity. In the JAIIB CAIIB Mahapack, you will be getting 2 years validity. And all the other batches and everything will be available. Okay. So the much better option is this. And out of these two Mahapacks, I would suggest the JAIIB CAIIB Mahapack will be more better for you. Because here, you will be covering the JAIIB CAIIB both for the next 2 years. It means after enrolling in the JAIIB CAIIB Mahapack, you don't have to invest anywhere else until you qualify the CAIIB. Okay. So, do check the details. It will be covering JAIIB all subjects, CAIIB all subjects, elective paper also, and ebook, test series, revision batches, everything will be available. The 2 years validity is here. To enroll, again, you have to use the code Y496 and click on the apply. When you apply, again, it will be showing you the 80% discount. For 1% additional discount, you have to go to the application. Okay, you have to go to the application to get the 1% additional discount, and it will be covering JAIIB, CAIIB both for the next 2 years. The price will be 10,500 around, and 81% discount plus the double validity will be available till 12 PM today. To enroll, you can use the code Y496. Okay, any doubt is there? Yes, Praveen sir, you can go to the bilingual also if you want. You can mail to the support at the ID that by mistake you have purchased the English medium batch. You want to convert it to bilingual, they will do that. There is a common group, Shushanta ma'am. You can search by my name, you can find there. Okay, that's a common group. PPP live classes are available in the evening from 9 to 10 PM. Do search that. And still, if you don't find it, do mail the support at the team. They will add the PPP batch in your account. But I don't think that if you have taken the Mahapack, it is not still added. So, do search the PPP subject. Okay, you will find it. Ashok sir, now it is not possible because I am already engaged in the another class from 8 to 9 AM. So, it's not possible to change the timing of class. E-books will be available after a while because we are working on it. Thank you so much, Uma ma'am. That's so nice of you. You can convert by mailing, by doing a mail to the support at the ID. Okay, you can drop a mail to the support at the ID. Ravi sir, you will find that. Hana, they will provide you the link and you will do that. You will get that. The next 2 subjects will be starting from, I will let you know in the upcoming days. If there is no profit still, no. See, as the income tax, in income tax, what happens? They have given us a slab that if you are earning 10 lakh rupees, you have to pay 10% tax. If you are earning 20 lakh rupees in a year, you have to pay 20% tax. Similarly, in the corporate tax, there is a slab. So whatever earning of a company is there, according to that, company has to pay tax. If the company is not having any profit, company is going to the laws that they do not have to do that. So slab is there. According to that, you have to pay the tax. AFM and retail banking classes when to start, I will be informing in the upcoming days. Don't worry about it. It will be start soon. Study plan will be available on the application soon. We are working on it. Support at the ID is, one second, let me tell you. Any other doubts? So it is support@247.com. Support@247.com. Prasanti ma'am, you can search by my name. You will find it. Clear? Chali, so let's end the session here. See you all tomorrow at the same time, and from tomorrow onwards, we will be starting the topic-wise study in depth, because there will be no foundation class anymore that we have completed, and from tomorrow we are starting the actual syllabus. Okay, so let's end the session here. Okay, so see you all tomorrow at the same time. Have a good day. Take care all.